Morning, everybody. Good morning. Good morning. Good morning. It's Ticker Thursdays. So make sure you've got some stocks ready that you want us to go through. We're going to go through two very important charts this morning together. One of which I've already floated in the trade ops area, members area. So if you're in there, you know one of them. And the other one is equally important and something that hit a big round number this morning. So we're going to look at that too. All right. Good morning, everyone. All right. Good morning, Steve. Good morning, Dave. Good morning, multiple Steves, actually. Good morning, Daily Trader. Good morning, all of you guys. Perfect. All right. Let's get started here. It's time. Yeah, perfect. Okay. All right. Good morning, everybody. Again, thanks for being here. Serge Berger here from thesteadytrader.com. This is our morning call. We're going to go through the top three things on my notebook. And if you're here for the first time, please make sure that you hit the like and subscribe buttons. If you do that, you are going to be able to be alerted in real time when we go live, which is something that is of great benefit to people who like to be joining us in these live sessions. So let's get started. So we'll look at two main things here this morning. First, let's quickly just start with equities, and then we're going to look at a very important chart in Google. And then I want to look at gold versus Bitcoin because I pasted that chart this morning in Trade Ops as well. So if you're in there, go check out the chart that I put into the Trade Op Trades channel. I posted an important chart in there. I will walk you guys through that chart here in just a minute. But let's start off with equities first. Really unchanged, quite frankly. We still think that we are in this sort of melt up phase, but really it's gonna get more and more difficult up here. So for now, exactly 1 week, whatever 1 week ago exactly was what day, we're basically in this sort of choppy range where we either gap up, we gap down, and then it just gets really, really choppy and messy during the day. So if you've been listening to us here for the past week, and certainly if you're in trade ops, you know we've made this very clear that that's a much choppier environment that we've had for the past, before then, for the past 3-4 weeks, where we saw a lot of intraday volatility, which was very fruitful. We're going to get back to a more orderly, but I think right now we're kind of at the top end of this range, and we're seeing a lot of choppiness, and that is one of those environments where, I think less is more. We want to make sure we don't do too much up here, because otherwise we do risk getting chopped up and ultimately just having unnecessary losses. So I think being patient here is important as far as just the broader U.S. equity complex is concerned. Very different picture over in Germany. If you look at the DAX, for example, is more or less back at all-time highs this morning. I think probably getting a bit overbought here too, but again, a very, very different dynamic. We've talked about this dynamic now all year long, that we really think that these fund flows, which I'm going to show it to you here on this next chart, look very different than what they have for a long time. In fact, if you look at the world equity indices, you can see this very, very clearly year to date. You can see the DAX, you can see the HSI in Hong Kong, and how all that stuff is outperforming basically U.S. equities. So that's a very, very different picture from what we've seen for quite some time now. So I just want everyone to be aware of that. So that's where we are in the equity space. Not a whole lot has changed there. Let's talk a little bit about Google. Now, I don't know how many of you watched the news yesterday, but what we saw yesterday was essentially what I think was a pretty important point in time for Alphabet, where finally we're starting to see some, third parties. In this case, it was Apple yesterday during the testimony of sort of the Google versus Apple cases that are running, talk about the drop-off in queries, search queries in the classic Google search engine. And if you looked at Google intraday yesterday, you would have seen a pretty ugly chart. Let me quickly see if I can show it to you. This is what it looked like yesterday. And this is just the intraday 5-minute chart. We ended up getting a beautiful 5-cell signal actually right before then. That became valid then, so then the stock basically fell apart for the rest of the day, down 8 or so or 7 or so percent from that point. But if we look at the charts, then you will see something that is, I think, really interesting. And what we're seeing is really a series of sort of struggles in the stock. And before I even start to annotate my lines here, let me just tell you that for me, the most important thing for me to get my signal from is our trend tracking and trend following algorithm. And it's called the Market Rover. And the Market Rover told us very clearly in February, in the second half of February, that I remember vividly, I was on a snowboarding trip, and I remember one morning waking up and getting the signal on that trend change, and it really, made me sit back and take notice. And you can see we had a nice bullish trend, and then finally that bullish trend ended in late February. Along the way, we had some beautiful trend following buy signals that you can see with those buy signals reaching their profit targets in the trailing stop. But we're now in what we call a neutral zone. And a neutral zone from a trend following perspective, or from a trend measuring perspective, just means that the odds aren't really great to do much of anything, certainly not from a trend following perspective. So we are now in a situation where we might be going through a phase transition, meaning we have to be very open-minded right now whether the next trend, and notice I'm using the word trend, not trade, whether the next trend is going to be back to the upside, so back into a green area, or whether the trend is going to go into a red background color, which would denote a bearish trend. So right now, the odds really aren't very great to do anything from a trend following perspective. There might be some trades, and I actually do think there's a trade. I'm going to share with you a couple of ideas here right now. So to me, this is important because it tells me that if I was long the stock, I don't have any. I shouldn't say never, but I didn't have any long exposure to the stock directionally on a single stock basis. I'm sure I own Google in some sort of a portfolio through an ETF or something, but I don't have any single stock exposure like on purpose. And so I didn't have to sell the stock. But if I was long the stock, at the very latest, by the time we got that signal in late February, early March, I would have sold the stock, right, and gotten rid of it. So if anyone here is long the stock, obviously I can't give you advice, but to the lens of education, I can tell you that a phase transition like this from bullish to neutral typically doesn't resolve itself right away. It's now 50-50 whether the next trend is now one that goes back to the upside or ultimately into a bearish trend for a time. I do want to also quickly, as a full disclosure, say I would never bet against Google or Alphabet through a longer term perspective. This is all, what I'm talking about here is more through a multi-week, maybe a multi-month lens, right? So this is not something to be structurally bearish Google for 10 years. I would not even fathom that. I think it's way too big of a beast of a company in a good way. In that sense, I mean that to bet against it structurally, it's more kind of where it is right now and what the fund flows might be. So if you get news headlines like yesterday and we analyze what sort of the struggle has been of this stock, we get to, I think, a conclusion that this stock is going to struggle for a bit longer here. So if you look at this very neutrally and open-minded, right, then you see that the stock ended up breaking out of above its 2021 high in 2024, so almost exactly 1 year ago. It then rallied 27%, gave all of it back to retest support in last September as we came out of summer. Then it had another rally, almost 40%, made a marginal new high, failed spectacularly, by the way, with a big notable gap down on the 5th of February this year, and then went right back to support. I think the odds now favor a move lower. My profit target, my downside target here from a trading perspective, so that's multi-week, multi-month, is probably somewhere in the low, 100s. So, maybe it's in the 120s. I don't want to go to the dollar because I just don't know, but that's kind of my point. So I think this is one of those stocks, and this could be done directionally. This could be done with options, with a bear call spread, or a bear put spread, or just buying puts, anything like that, right? But my time frame here is really multi-week, multi-month, as opposed to multi-quarter, multi-year, or multi-day, right? I think it's going to be longer than a few days. I think it's going to be less than a few quarters, because again, I wouldn't want to bet against Google structurally. This is more sort of like a multi-week, multi-month kind of trade. I think if this stock were to be able to overcome 170, I think 170 is an important level for the near term. So if it were to be able to break and get above there, that would probably be concerning for me, and I would want to close shorts. So that's just my own plan there. Again, if you guys have any questions, let me know. Also, we're going to now talk. So that's Google. So hopefully this has been helpful. Any feedback is always welcome. We're going to do Ticker Thursdays here in just a couple minutes, meaning we're going to take some tickers you guys want to look at. But first, I do want to talk about Bitcoin. Now, if you have been following us here for the past about a month or so, you've heard me talk about how we are seeing more and more bullish behavior in the price of Bitcoin. And if you receive our Monday email every Monday morning with an update on the Bitcoin's short-term trend and its longer-term trend, then you've heard us constantly get more and more bullish on it again, to the point where we are right now, where it's basically bullish from a short-term perspective and bullish from a long-term perspective for now. We've now reached 100,000 this morning, and what's really interesting to me is how it relates to this chart here that you can see on your screen right now. So what you're seeing here is the price of Bitcoin, which is the blue line, versus the price of gold. And we can do this in all sorts of different ways. I have it this way so you can kind of see it a bit better in terms of catching up. But it, to me, looks increasingly likely that not only is gold going to pause here for a while, and we've talked about this here extensively over the past few weeks as well, that we think, in fact, past 2 weeks, that we think gold might be getting a bit tired up here. The dollar may be a bit oversold. And so we think it's plausible that gold, which is the red line, is going to start mean reverting a bit, meaning coming down a bit, consolidating, whatever you want to call it. Maybe gold goes back to 3,000, I don't know, something like that. And what's interesting is that at the same time, Bitcoin is looking actually notably stronger. In fact, this morning is a perfect example of that. Bitcoin's still up north of 3% this morning, whereas the price of gold is it's actually rallying now, but it's down about 0.75% in the cash market. So, to me, this is very notable in terms of behavior, and it's interesting because it's easy to come to the conclusion that gold and Bitcoin should trade in sync, but they really don't. Like, Bitcoin kind of, it's a bit more of a chameleon. I heard someone make that analogy a while ago. I think that's a good point. So Bitcoin can act very well when it's risk on, right? So when equities rally, then Bitcoin can do very well. But at the same time, you can also have a situation where right now, where there is just people are looking to diversify their money at the margin away, and I say at the margin, out of U.S. assets. And I think one of those things that people are allocating to is Bitcoin, right? So Bitcoin maybe has that sort of bid there as well. So those are the two major things, I guess 3 things I want to go through. If anyone has any single stock tickers outside of Google that you would like us to look at, I'm more than happy to take a couple minutes here to go through them, and then we can address anything you want on those. While I wait for some tickers, if you guys have any, I just want to quickly mention that we do this morning show Monday through Thursday. So today is the last morning call for this week, and we come back on Monday with this. Okay, so just to give you a quick FYI for those of you that are new to this. Alrighty. Okay. All right, let's talk about it. So the first one here is by Thomas. He wants to look at HIMS, IHMS. So HIMS is a classic chart chaser stock. So what that means is it's very much a retail name. What you want to do, Thomas, is you want to respect trends in something like this. So again, you can see this is a stock that's in a bullish trend. So if you use the market rover, then you want to respect the trends, because this is a stock that goes along with flows. So right now, I think the stock's overbought in the near term, but it is very much a momentum name within the trend following through a trend following lens. So basically, what that means is I wouldn't want to short it, right? I would want to respect these moves to the upside. I wouldn't chase it necessarily right here, right now, but I would want to respect the fact that this is a name that's heavily influenced by message boards, by retail traders that have very little to no experience, that just know that they want to buy something because their Reddit board told them so. So that's the kind of stock that is. So, I just would be a bit careful because it's volatile, but it's not something I'd want to short right now for sure. In fact, if anything, I'd maybe be long. Amazon, look, with Amazon, we just have to be very mindful of the fact that this stock is going to at some point be consumer cyclically focused. So to me, Amazon looks no different than the S&P 500. It's rallied off the lows, and it has a lot of resistance up here. So to me, Amazon's a wait and see, because we're inevitably going to start to see impact of tariffs to some extent, and I just don't know how the stock reacts. I don't want to be long or shorted here, to be honest with you. I think there's a lot of overhead resistance, and the next sort of news that everyone's waiting for now is to see how is the consumer holding up, and how is the actual hard data of economic data going to come out once the tariffs are going to start to be felt to some extent. They haven't yet been felt in a huge way. So to me, it's kind of a stay away at this point, to be honest with you. I'm watching it. And then Bill wants to look at DASH as H. I personally am staying away from this name because they just had a major M&A announcement the other day. So typically when that happens, depending on whether it's accretive or not, I think the M&A the investment banking, the analyst community really has to kind of get their head around it. I don't see a lot to do. I think the stocks had a big 2-day move. I just don't see much reason to do a whole lot here in this stock either. I think you're getting to again, you have to have there's a consolidation phase here. What I would also point out with this stock is that it's basically in a trading range, right? So this is your trading range. So, I always like to be at the extremes of the trading range to make a call unless there's a clear trend. In this case, the stock is now at the same point it was in November of last year, right? So I just don't see a great edge to do anything here. The stock is just back to where it was in November. So where it's at the lower end of the range, but it's not at the very absolute low end. So we're kind of in the middle where it could go either. And then Devendra wants to look at BITO. I mean, we just talked about Bitcoin, so it's the same thing as that. So BITO is nothing more than the underlying. So Devendra, like we keep saying, and I believe, you ask these questions a lot, and that's good, right? But just understand that if you want to do BITO, you need to really be analyzing the the underlying asset. The underlying asset for this is Bitcoin, just like the underlying asset for MSTX is MSTR, and so on and so on and so on and so forth. So all of you guys really have to get to the point where you start analyzing the underlying assets and not the derivatives of them. The derivatives are nothing more than a derivative, right? They're going to act in line with that. So to me, Bitcoin making new highs or not new highs, but reaching 100,000 this morning, I would imagine that BITO might have a bit higher to go. So I don't think that's out of the question from a trending perspective. And Tesla's in a huge choppy range, so there to absolutely stay away. TS long. We've talked about Tesla for since last September, when we had a huge buy signal that came in September. Then we set take profit in December because it reached our profit target. And basically since February, the stock's in a trading range. I have absolutely no reason to do anything in Tesla here right now. So if I were to kind of summarize what I'm hearing from a lot of the questions you guys are asking, we're in a trading range. We're consolidating and we're in the higher end of the trading range. And so that's where I'd be. And then Judy's asking about copper. Look, at copper, we have a product that we run. It's called the Heat Seeker Report, where we are tracking and doing what likely is going to be a huge trade in copper and material stocks. And we're going to be doing that one until it hits the home run that we think it will. It could take a bit, but right now, I think what's important to understand about copper is, and again, I'm unbelievably bullish on it, just to give you some perspective on this in the long term. And this is largely due because we need copper like crazy if we want to build out energy, AI, all that kind of stuff. So this is just to give you, in fact, to look at copper, we have to really look at the copper futures, because that's where that's the underlying, right? CPER is an ETF, but it hasn't existed for that long. So this is the long-term view of copper. You see, I'm going to get rid of some of these lines here, but this is what copper looks like. I'm going to give it to you here like this. So to me, it's unbelievably bullish, but, and this is the thing about here right now, in the near term, and you can see how well copper's holding up. You can see in the near term, it even had a very strong reversal candle. However, the thing with copper is this: when we have economic weakness, a lot of the macro models, so basically big macro hedge funds and such, they typically, the first thing they do without asking any questions is they go ahead and they sell things like copper, because copper is essentially synonymous with global growth, right? You buy copper when there's global growth. But when global growth is at the margin potentially slowing down, at least US growth right now, then copper is going to have a hard time breaking to fresh all-time highs. But as soon as we start to see even just the slightest inkling of coming to the further end of that, and once investors are able to see through that, then I think copper is going to have an unbelievable run along with other materials. And again, if you're in the Heat Seeker program, we are already beginning, but we're going to slowly start walking people through this. And it's just, there's a 10 to 20x trade in all of that, but we have to position to it. So until we get through, we have to get through more to some more clarity, right? In the macroeconomic outlook. And I think that's when you start to see this trigger. So we're long a little bit copper in a couple of different ways, particularly in Heat Seeker, but we're not at all yet at a point where we're like going max long. We're just dabbling for right now, just so we have some exposure. Shopify, last but not least, this is for Nubia. I think Shopify is going to have to be, let me try to explain this to you. So Shopify, to me, it's a bit of a, I'm trying to find the right word for it, because it's consumer sensitive, but it's not something that's too sensitive to the consumer. So I think when I look at Shopify, I have to see how is it going to act in the next, really coming months as we find out more about the economy. Is it going to be able to hold up better, or is it going to be something that is just going to go with maybe potentially more weakness in the economy? What I can tell you right now is very much like a lot of the stocks you guys are mentioning. To me, the stock's in a trading range. That's where I'm at with this stock right now. I don't see any reason to do anything with this right now. From a trading perspective, maybe there's a quick trade to do if you're using our momentum indicators, like the trender or the trend ruler. But to me, the stock is now exactly at the same level it was in February. It's at the same level it was in January of 2022. So if you draw a straight line, this is Nubia, and let me know if this is helpful for you, Nubia. The stock, to me, it's just in no man's land. Not only is it in a trading range that it's been in since October, it's at the same level it was in February of last year, right? And again, basically in January of 2022. So that's what I would say. Tony's asking, do you see the market going up to new highs? Which market, Tony? What the market, is it commodities? Are you talking about currency? Are you talking about equities? Are you talking about European equities, Asian equities, small cap, large cap? What's the market for you? Can you be just a little bit more specific? And again, Nubia, hopefully this is helpful, and anyone else on Shopify. So you have to just you have to look at it through that lens. I don't think there's a whole lot to do there. I think the broader like the U.S. equity market, if that's the question, and I'm just going to make that assumption, Tony, that's your question. I think the odds of the S&P making new highs is about zero in the near term. I shouldn't say exactly zero because it's never exactly zero, but I think the NASDAQ 100 is mathematically almost zero. We have overhead resistance because of there is one thing you guys have to understand about the market is this. We live in a gambling bubble. I say this almost every morning here. I know it hasn't yet caught up to the retail investor, but we live in an unbelievable gambling bubble, like epic proportions. It's going to blow up and it's going to be really nasty when it does, but it could take way more time. In the meantime, though, from a multi-quarter lens, what I'm telling you, I've been saying it for 12 months, for more than 12 months now to our clients, large international global allocators, be that, insurance companies, pension funds, sovereign funds, they are at the margin bringing down their dramatic overexposure to U.S. equities. And the stuff they have the most of U.S. equities is U.S. mega cap tech stocks, which is basically the NASDAQ 100. So any meaningful lift off rally, they're going to start to sell into it. They have so much of it, and this doesn't take one day. These people make decisions over the course of multiple quarters, sometimes multiple years in an extreme case. So they're going to continue to reduce that to bring their portfolios back into more balance. And they're doing the same thing with long-term treasuries as well, by the way. So is the NASDAQ 100 going to go to fresh all-time highs anytime soon? I think the chances are almost zero. Just because people are selling into it, I don't want to say zero at all because there's always a chance, but I think it's very, very small. What would change my mind would be if we would start to see a very different tone of tariffs and a very different behavior in the dollar, right? The dollar would have to start getting continually stronger, and that's just right here, right now. Not the case. So this has been a very long session, especially for our trade ops. So hopefully this has been helpful for all of you guys. Thanks for being here. I'll see you over in trade ops. Sorry, this is the Set the Market morning call. We are not doing this morning call on Friday because we do it Monday through Thursday, because Fridays I have to do a lot more research and make sure we're up to speed on things. But I'll see you guys back here at the very latest on Monday morning, 9 o'clock Eastern time. Again, please, very important, please give us a thumbs up, like, and please subscribe to the channel. Please tell everyone you can so we can continue to do this morning show for you guys, this morning call, and so that you actually get updated in real time when we go live. So thank you all. Have a great weekend. I'll see you over in Trade Ops for those of you guys that are members, and otherwise I'll see you back here Monday morning. Take care.